Well, the crypto crackdown continues with news that the SEC is suing Terraform Labs and co-founder Do Kwon. Now, this after a full week of headlines as scrutiny of the space intensifies. Here with the latest, Yahoo Finance's David Hollerith. Hey, David.
Hey, Rochelle. Clearly, in the U.S., crypto industry firms have been playing defense since 2023 started. Now, this latest action from Thursday afternoon from the SEC alleging that Terraform Labs founder and CEO, as well as the company itself, defrauded investors is definitely less controversial, we might say. Many will recall the collapse of the Terra blockchain ecosystem at the beginning of May of last year. And the breaking of Terra's algorithmic stablecoin, UST, from its $1 price is in many ways what initiated crypto's 2022 collapse. Although obviously there are plenty of other industry participants where fingers can be pointed. But this is the SEC's fifth enforcement action in 2023 against crypto firms. And it follows the $30 million charge against crypto exchange Paxos for its Kraken for its staking program, as well as notice that Paxos, the stablecoin issuer, said on Monday that it had received information from the SEC saying that the SEC could potentially put an enforcement action against its own program. And then also the SEC has proposed a new custody rule that would tighten requirements for investment advisors holding on to the crypto custody or the assets of their clients and how they custody them. So at a high level, this might seem obvious that this is in a lot of ways a U.S. regulatory reaction to last year's collapse in cryptocurrencies. But firms are plenty critical of this regulation by enforcement approach that has been going on. And there's been a number of accounts I've just had in conversations of crypto firms, startups especially, that are considering leaving the U.S. market as a result.
And we know that obviously the SEC chair, Gary Gensler, did have that warning there that shot across the bow that some of these companies should be aware. And so as we continue then this big push for regulating crypto, how are those markets reacting to the news?
Yeah, it's interesting. It's definitely been a tale of two stories for cryptocurrencies. While there's been all these, there has been specific regulatory reactions, particularly based around Coinbase, which gets revenues that could be implicated by some of these enforcement actions. The crypto market is largely still being led by Bitcoin, which in turn has been dominated by this hot and cold macro environment that we've been in. And after Tuesday's inflation report, Bitcoin had a sizable run in. That came, at least in part from a number of short position liquidations that carried through Wednesday, and as well as an uptick in trading activity in Asian markets. Bitcoin rose $25,000 or above it Thursday, and then also Thursday evening we saw about a 3% correction. Interestingly, the largest cryptocurrency, which is generally more volatile, isn't showing quite the same change in volatility as seen in the bond and equity markets. In the options market for Bitcoin, funding rates in the futures basis for Bitcoin aren't really showing any warning signs yet either. And so the tension in the rates market right now hasn't really shown up quite as much as we might expect in cryptocurrencies.
That's interesting, considering how we used to see those wild swings matching, but a different story here. Interesting stuff there, Dave Hollerith. Thanks so much.